Hello everyone, welcome back to Energy World, where we break down the biggest developments in oil, gas, power and renewables and what they actually mean for you, for government, investors and the energy players. Today we bring you a story about Aramco's Q3 2025 results. And trust me, it's not just another headline, it's a masterclass in how strategic energy management shapes national and global outcomes. What is the story? Aramco has released its third quarter numbers, posting $28 billion in adjusted net income for third quarter 2025, slightly higher than last year. Cash flow is very solid, with over $36 billion in operating cash, and the company declared about $21 billion in dividends for the quarter. But here is where it gets interesting. Aramco is raising its gas production targets by nearly 80% by the year 2030. That's a massive bet on natural gas as a bridge fuel for the energy transition. So, while some companies are slowing down on fossil investments, Aramco is doubling down strategically to diversify its income streams. Now, what does this mean globally? This signals a few things. First, oil isn't going anywhere soon. Aramco's profits show that efficient producers still try, even with fluctuating oil prices. Second is that gas is becoming the new center of gravity, not just for energy supply, but for geopolitical power dynamics. Countries in Africa, Latin America, Asia with gas potentials, Nigeria included, now see a clear signal that the next big growth play is in gas infrastructure, LNG, and midstream investments. Now, for energy investors, this is a reminder that oil majors are repositioning. They are not abandoning hydrocarbons, they are optimizing them for the low carbon era. Let's talk about the implications for other stakeholders. For government, for example, efficient national oil companies are very important. Aramco's performance proves that strong governance, cost control, and clear growth strategies can translate directly to national fiscal stability. That's exactly why NNPC's ongoing reforms and efficiency drive are so important for Nigeria. If NNPC can replicate Aramco's discipline, transparency, efficient project delivery, clear gas monetization plans, Nigeria can also attract investors and grow revenue beyond just crude exports. For investors and financiers, cash flow resilience is important too. Aramco's numbers send good signals to banks, private equity, and sovereign funds that large, well-managed projects are still bankable. It means that investors will keep funding fossil-linked projects that have clear transition pathways, like gas to power, carbon capture projects, and so on. Now, for private sector and service providers, this reinforces the value of performance-based contracting. Aramco's model works because its service ecosystem, from engineering, procurement, and construction to logistics, operates under well-structured contracts with measurable deliverables. That's a legal and commercial lesson for companies across Nigeria and Africa. Clarity and accountability in service contracts reduce losses and legal disputes. Now, for the global transition agenda, Aramco's drive towards gas shows that the energy transition won't be uniform. The world needs reliable hydrocarbons, while renewables continue to scale. So, instead of a sudden switch, we will be seeing a managed shift, therefore balancing energy security, cost, and climate goals. So, what's the big takeaway here? Aramco's success story is less about oil and more about discipline, diversification, and deliberate strategy. If Nigeria, through NNPC and its energy reforms, can emulate this model, focusing on efficiency, gas monetization, and transparency, it will surely not only secure fiscal stability, but also position itself as a real player in the global gas era. With Aramco's result, one would naturally think of the potential of Nigeria's NNPC Limited. Recall that NNPC has started its transparency journey with the publication of its monthly operating results. NNPC announced its first ever profit in 2023 financial year, about 3.3 trillion naira, and a 2.1 trillion naira dividend to the government. We eagerly await its 2024 financial results. In April 2025, NNPC reported 748 billion profit after tax. In May, profit after tax rose to 1.05 trillion, which declined to 905 billion in June. In the month of September, profit declined to 216 billion, partly due to reduced oil production and based on labor union 3-day strike action. Aramco's financials are audited, published, and trusted globally. That trust attracts investment, reduces borrowing, and keeps Saudi Arabia's fiscal system stable, even when oil prices swing. Now, what NNPC can learn from this? First is governance. Transparency builds credibility. Investors, partners, and even citizens want to see where every naira goes. Second is efficiency. Aramco manages cost and maximizes output for NNPC, cutting costs, reducing oil theft, and efficient project management. The third is diversification. Aramco earns money beyond crude. Its refining, petrochemicals, and gas business create multiple income streams. NNPC can replicate this by deepening its play in refining, LNG, and renewables. We talk about its partnership drive for its refineries. When NNPC thrives, Nigeria benefits from energy access to foreign exchange stability. A stronger, more transparent NNPC means less debt pressure and a more resilient economy. Now, what is the road ahead for NNPC? Under the Petroleum Industry Act, PIA, NNPC is preparing for its IPO that will bring in other private investors. This intention is expressed in Section 53 of the PIA, setting the process for private ownership of shares in NNPC Limited. This will be a major milestone, but the success of it will depend on NNPC's credibility, transparency, audited financials, consistent profits, and a clear growth strategy. If those reforms are sustained, NNPC could attract global partners and reposition Nigeria as a serious player in the global energy space, not just as a crude exporter, but as a fully integrated energy company. So, Aramco's numbers aren't just headlines, they are a benchmark of what's possible when a national oil company runs efficiently and strategically. And that's all we have on this big story. I am Babatunde. If you found this very useful, please subscribe, like, share, and feel free to share your comments as well. Thank you very much.